presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man George in Newport Richie. George, what's going on, brother?
Hello, Tom. Good afternoon. How are you?
I'm doing great. Yourself?
Yeah, great. I've been following you for the last 2 years, listening to your show.
Well, thank you very much. I appreciate it, George.
All the hard work you've done for us over the years.
Well, I really appreciate you calling and saying hi.
My pleasure, Tom.
Okay.
I'll listen to your show.
Thank you, man. Have a great one, a safe one. Appreciate it, man.
Now, Tom O'Brien.
What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. Hope you all have had a good day. Got a short week here. Definitely feels like it. We'll be off tomorrow, of course, for Good Friday. Taking a look at the SPY, trading about 0.55%, 528.56. Get the composite, trading up about 0.12% at 16,326. The Dow Jones Industrial off nearly a percent here, fully a percent, trading off about 400 points. Russell futures to the upside a little bit, up 0.90. Listen, what is this options expiration? I don't know. Nothing this week has been great. Volume has been very low. About the highest volume we've had was that kind of sell-off, right, from that retest of that gap. And we're now cooking around, volume we had on Tuesday. Just not a ton going on with the holiday season. Of course, some more developments with territories that we've covered. You have the dollar still below 100 here, okay? So very weak. You have some larger firms that are now short the dollar, trading at 99.39, up about 0.12%. Crude oil roaring. I wish I stayed more into that gush position, but you're trading up 3.23%. In the gold contract, gold coming off just a little bit, trading off about 0.5% at 3,329. Copper up slightly. Silver off 1.61% at 32.45. Let's see what else we got cooking right now. Disney up a little bit. Lucid up. Very interesting, especially considering more discussion on cutting funding for renewables. That's trading up 3.03%. Listen, there is a play to be made here a little bit with Lucid. I don't think it's like if you sat and actually did the math on it, it probably wouldn't be the best one. But what I think could happen, and we've seen it, is that this is starting to become like the contra Tesla play, right? And so Tesla has earnings next Tuesday. I don't see how that is going to be good for them. I still think the stock is very high price-wise. They're going to have a lot of issues with China. I do not believe that full self-driving, even if they're able to bring it out in June, will be profitable at all anytime soon. And I don't think the robots are going to be a thing for them. Now, Musk, of course, can say whatever he wants and say, we're going to make $10 trillion in revenue or whatever by 2030 with the robots. That might see some kind of short-term buying, but in reality, I think people are very nervous about equities right now, even retail to a certain extent. Keep in mind, all these insane kind of movements to the upside and then down and then up again and then down. It's just been retail getting vaporized in Tesla. So, I'm starting to think there is a once bitten, twice shy kind of thing. A lot of the large forums online that discuss things around earnings or different equities, which in the past were very pro-Tesla, are now no longer that. So, even on some positive news, you don't get as much as the talk online with Tesla. So, you're trading off 0.63% at 240. Point being, if they have bad forward guidance, which I believe they probably will, you might see some money going into Lucid. Now, if it is bad forward guidance because of everything in the automotive sector, and Lucid has exposure to things overseas, then both obviously will get sold off there. Roku off about 0.44%. Not any real substantial movement whatsoever. Let's take a look at an equity that we got into yesterday, which is Energy Fuels. That is trading up 10.5% today on some pretty strong volume. Love to see that. What is this on? Well, it's what we've kind of been talking about, right? They were making deals with Chemours to build out rare earth element supply chain in the U.S. They were able to produce neodymium, praseodymium as well, very important for things like motors. So they additionally come out with a big paper saying that they can fill the gap that will be left by not having a mineral deal with China. So they said they can do 6 of the 7 minerals, which is fine. Again, the major one that you really want is that neodymium, praseodymium alloy. Monazite concentrates, samarium, gadolinium, okay, right. I mean, these things are important, right? But it's the neodymium that's extremely important. I think the one that they're unable to extract will be gallium, and I'm not sure if anyone in the U.S. extracts gallium. That is a very big thing that China has, and I'm not seeing it listed here, so I'm kind of going to assume that's what that is. But regardless, you're starting to get the news flowing in quite a bit of Energy Fuels potentially being able to fill that gap, and that is driving this 10.38% movement to the upside after we saw about a 6% movement, finishing at the end of the day yesterday, move to the upside as well. I still like Energy Fuels. There, of course, is going to be a deal supposedly struck with Ukraine next Thursday. That could see some selling pressure, and I think that's kind of what you might be seeing in things like MP. Now, additionally, MP and USAR, just had massive movement to the upside recently. Energy Fuels, didn't experience that over the same time period, but people caught on and are now funneling in to Energy Fuels as well. And additionally, USAR. So I'm not sure if these are getting kind of sold off on that news. What I would say is that even if you strike a deal with Ukraine, I think it's a lot harder to do business there than it would be just to build out in the U.S. And anyway, I think building out in the U.S. will be kind of the goal. It's just far safer. So anyways, that's kind of what we got going on in that realm. Taking a look at Oklo right now. I still like Energy Fuels as well for uranium exposure, but that's longer term. Trading at 0.61%, seems like there really is some kind of push internally with Trump, with the Trump administration, to start building out nuclear energy, okay? So let's take a look here. You had Chris Wright step down from Oklo's board in February, became the U.S. Secretary of Energy in the Trump administration. This is a very pro-nuclear kind of guy. Of course, you had some deals passed as well to put fixed but modular reactors on military bases. So he described the AI race as next Manhattan project, essentially said, we can build things with nuclear. We can actually fuel this new Manhattan project, right? So we'll see if some more stuff develops out of that. Looking at Oklo, I think they burn a lot of money and they don't have anything. You guys know how I feel about that, but the headlines can just push it. We saw that in October. Can push these equities sky high, and it's been holding well at this $20 level. Folks, stay there. We'll be right back with Tim Ward after the break.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. Jacob Shoup, you're watching the Tom O'Brien Show. When we wrap up the show, I want to talk a little bit about the Golden Dome project, as it's called, which they're saying is the Iron Dome for America. I thought we had Aegis already, but I'm not really sure. Take a look at some companies. Contrary to what I think a lot of people are writing about, I'm not sure that SpaceX will necessarily get those contracts. That might be a little too on the nose. And additionally, you've had Musk come out and say, we would like to see some other people potentially step in as well and kind of help with the Golden Dome. Companies that I'm looking at for that are going to be things like L3 Harris and Rocket Labs. Rocket Labs just landed a pretty decent contract with the UK. Rocket Labs has the HASTE program already that services American defense. So we're going to talk a lot about that, and maybe we can get freaky with some rocket equities. All right, let's go over to Tommy's newsletter. Let's go over right now to our web browser. We're going to type in ord-oracle.com. Although it is the day before our weekend, it is still a Thursday, and that means we are joined by Tim Ord. He is on every Tuesday and Thursday. You can check out his website, his newsletter, and his book at ord-oracle.com. Tim, how are you doing?
Good. I'm trying to get this thing loaded up.
Oh yeah, no problem. Share the screen. I see.
Can you get it? You see it?
I'm not seeing it yet, but
okay.
Let's
see.
The technology never gets any easier, surprisingly.
It's kind of the first time I'm using this. Let's see. We'll get there.
Okay, well, let's have the producer help you out for a moment. I'm going to run over some stuff with the equities I was looking at, and then we can bring you back on. Does that sound good, Tim?
Yep, that sounds good.
Okay, cool. We'll bring down your volume here for a moment, then we'll get that worked out. All right, so what I want to talk about right now is going to be the Iron Dome for America. Okay, so this is Trump's plan. If you're not familiar with what the Iron Dome is, it's a ground-to-air defense system. You probably saw videos of it when Iran launched missiles into Israel, I believe sometime last year. Very decent. Obviously, you saw an issue with it in Israel because it can get overwhelmed very easily. Trump wants to essentially do the same thing. Again, I thought we had Aegis for this, but it must be, I don't know, it must not be viable anymore. This is defense against the United States against ballistic hypersonic advanced cruise missiles, acceleration deployment of the hypersonic ballistic tracking space sensor layer, development and deployment of proliferated space-based interceptors capable of boost phase intercept, and also, for us developing competent hypersonics. There are hypersonics that we have that exist, but it was a very mad dash when we realized that Russia and China had them before us. You have companies currently, and again, I wish we could get exposure to it, but we can't currently, which is Anduril. I follow Anduril on basically every platform I can, and they're working on a hypersonic thruster currently, which is very interesting. But we can also take a look a little bit at Rocket Lab, okay? So let's take a look here. You're trading off 1.83% at 1962. Now, this is kind of speculative, right? Ah, I see. Check this. This is what you call a cliffhanger. We're going to keep you right there. We're going to talk about Rocket Lab in a moment, but it seems that we got Tim Ord's charts up. Tim, how are you doing?
All right.
Okay, fantastic.
We'll get better as we go forward.
No, for sure.
All right, we're going to take a look at things are actually looking a lot better.
Yeah.
But they're not quite. I think here's what's going to go on. But anyhow, the bottom window is the 3-day trend. It sets at 1.27. That's bullish. 2-day trend, not quite as bullish as 3-day. It sets at 1.39. The 5-day is neutral, which is right here, 102. And the 10-day is approaching bullishness. Again, it has to be up around 1.2, preferably higher. And so it's creeping up there, suggesting that we're in a process of making a bottom. And we'll show more evidence as we go forward here. All right, this is... Get to the next one. This is kind of anyhow, we have this wag breast thrust indicator, and actually hasn't triggered bullish yet, but I got another indicator that I kind of developed that it does pretty good, showing up at lows, I'll put it that way, which is advanced decline, NYSE advancing issues divided NYSE declining issues with a 5-day average. And it has to go from basically 0.3 or 0.7 to 3.0 within 21 days, and it actually has done that. It actually has done it back in January too. That one actually failed because right after that, Trump started talking about tariffs, and I didn't think the market was set up to comprehend what the tariffs meant. So the market went down in a big way. And I think it's going to go down in just an ABC. But we got one right here at a low. And if you notice, they come in clusters. This is 2022 low. We had one there. All this tan area are times when this indicator flipped bullish. And you had about 4 of them in a row there over close to a year of basing went there. And we had another one pretty much in the same price level in October of last year. We really didn't have anything until January this year, and again right now. So if we do go back down, test the low, which I think we will, we may get another one. This is flip bullish. Does that mean we have a bottom right now? No, not yet. But there's evidence that we're probably building one. So here's this wag breast thrust indicator. This thing needs to get below 0.4 up to 0.6 in 10 days, 2 weeks basically. And it hasn't done it yet. And it may do it here over the next week or two. Don't know. The market really has to kind of remain strong to do that. I'm not sure that's going to happen, but it still could flip. The signal started April 7th, and it needs to complete, I think, next Tuesday. So we've only got actually a couple more days for that to happen, and it may not happen. But if it does, that'd be another sign that the market's making a base here. But again, the previous indicator has flipped, but you could get multiples before it actually flips to bullish. Let's get down to here's the reason why I think the market's in a basing period. The market has to go through a selling climax. Right after that, you have to have a sign of strength. And that's how bottoms are formed. And actually, we have that in the SPY. Last Monday, we had a selling climax. We had a huge volume down day. And if you look at this volume here compared to the previous volumes, this is way higher. This is an exhaustion move to the downside.
Right.
So I'm thinking we're starting a basing period. And anyhow, this is a selling climax day. That day we actually traded. We got long here and actually sold there. That was a sign of strength day. And that's a sign of strength in volume. And also we had a sign of strength in advanced decline. because this one triggered. So you got two. You got a volume bullish sign at sign of strength, and you got advanced sign of strength. So you got two things going on here. So I'm thinking this market is not heading to abyss, but I think at some point where most selling climaxes are tested at some point. So I think we are going to come down here,
Yeah, Tim, please stay right there. Folks, we'll be right back with Tim Ord after the break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. We're joined right now by Tim Ord of the Ord Oracle. Tim, before we went to the break, we were looking at the chart with the selling climax sign of strength for the SPY.
All right. Should we keep on going here?
I believe so. I also think as well, there might be some issues with charts on your end, so I think we're going to go with the ones that you sent me. So it might be a little helpful if...
Oh, you can't see them?
Yeah. So what I have right now is I have the chart that you sent me with the selling climax, sign of strength, 10-day trend, 21-day trend, 63-day trend up. Of course, I have the other ones that you sent me as well.
All right. Okay. So, well, anyhow, if you go back and look at all these declines, the rally off the lows, if the volume drops out of them going up, that means there's more to come to the downside.
Yep.
And again, we don't have that here. We actually have a sign of strength off that low. So this whole market's just started a basing period. And again, you had a high volume low there, that low of April 7th.
Yep.
Will be, well, I don't know. There's not a 100% chance, but there's probably about a 90% chance that low is going to be tested. And when that tests, it'll at least test once, and it could test a couple of times, but at least once that's going to be tested. And that's going to be a big buy signal, because to get back down there, it's a long ways down there. It's probably, 7-8% down from where we are right now.
Right.
But I think we'll probably go back up and test last Wednesday's high, which is that sign of strength high, and we'll probably test that and try to get through that. To get through that high, you need volume equal to that volume day, which is basically 250 million shares. And I don't think we're going to have enough energy to push through that. So if you can't get through that high, the market will reverse, try to get down to a previous low. That previous low is also last Wednesday. So anyhow, so it's going to get messy here is what I'm trying to say. But the whole thing is making a bottom here. And I thought we might, break through the lows of April 7th and keep going down. I don't think that's the case. The volume's too high. To get through that volume of April 7th, you're going to need over 250 million shares to get through it.
Yeah.
And that's unlikely. So it can happen possibly, but I don't think so. So decline's done. We are going to flip sideways now for, I don't know. It's hard to say, could be a month, could be a couple of months, could be 3-4 months, don't know. But it's going to be a good trading opportunity because it's going to bounce off previous highs, previous lows. And right now we're kind of just stuck in the middle of between last Wednesday's high and last Wednesday's low, which last Wednesday's low is approximately about like 495 on the SPY, and the previous high is 550. So we're going to bounce around in that level. And at some point, we're going to test that April 7th low. So, so the market's not making any commitment right here, right between the highs and lows. So I don't see a good setup short term. But
sure.
The equity market is actually turning bullish. So let's look at the gold market.
Yes.
So that'd be the next chart.
The GDX ADP with the daily GDX on it.
Right. This is a terminal. It's a 50-day average, which is basically 2.5 months. It's the bottom window is GDX cumulative up-down volume with the 50-day average, and it's bullish anything above zero. So there's more up volume going than down volume, and that's what uptrends are made of, higher up volume compared to down volume. And so even though we're probably at a short-term high here, this indicator is actually showing strength. I mean, it's most of the interior of GDX stocks are actually holding up well. We are going to get a pullback, but this indicator so far is not showing a massive weakness. So if you look at, from basically January on, we've been holding pretty strong, around that plus 10 area.
Sure.
And so I think we're going to hold around that plus 10 area, even though we may have a pullback here. Pullback, we got support. Actually, let's look at the next chart. The next, okay, this is a monthly chart. I keep showing this chart. This shows the internal strength of the monthly time frame. Uptrends intact. There's no, on the monthly chart, we're not even close to a sell signal. The bottom window is a GDX up-down volume cumulative on a monthly time frame with this Bollinger Band. And as long as this indicator stays above the mid-Bollinger Band, the trend's up. If you notice on the bottom one, we made higher highs above the previous high, and that's what's supposed to happen. You're in uptrend. You should make higher highs, higher lows. Next window up is the monthly GDX advanced decline. and it's also on a buy signal because it's above this mid-Bollinger Band and making higher highs. So monthly look fine. 2.5 months indicator looks fine. So let's look at kind of the short-term picture, see what's going on. And this is the reason why we got out of our GDX position. We actually, if you look on a daily chart, we probably went parabolic. Parabolic only, it's usually kind of ends badly, but it's on the daily time frame. But on the monthly time frame here, we're kind of bearish also because we did close. If market gets stretched in any direction too far, it at least snaps back to a kind of a mid-range. A lot of time goes back to the mid-Bollinger Band. And it's stretched too far to the upside. We're way above the mid-Bollinger Band. And I mark the times we're 80% above the above the upper Bollinger Band. And all those sometimes they're multi-months, sometimes they're not. The ones I got pictured here in 2016, 2019, and 2020 were multi-month pullbacks, or even a multi-year pullbacks. I don't think that's going to happen here, but I do think it could be a multi-month pullback, possibly into July. That's what I'm thinking. Yeah. Because we're not going to probably break 39, which is that support area, which is basically the previous highs. Probably going to go down there and find support. And there's another reason why I think we're going to find support there is, okay, good. I did do that. Okay, next chart is the daily GDX. And what's this pattern is forming here is 3 drives to the top pattern. You got a top back in February. Market goes down, goes back up, makes a higher high in March, then retraces quite a bit of that pattern, over 61.8% retracement on high volume. And that's the key on a 3 drives to the top pattern. The second pullback off the second high should have increased volume. If you notice, it did. Then the market goes up to make a third higher high. And if you notice the volume, if you do an average daily volume of that pullback on this wave 2 pullback, is higher than the average daily volume going up to new highs. And I do a lot of stuff with average volume. I call it ORD volume, and it works pretty well. But even though we did... I hear the music.
Yeah, you want to hang right there, Tim?
Yep, I'll hang.
Great. Folks, Sarah there. We'll be right back with Tim Moore to talk about gold after the break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. This is Jacob Schuper, joined right now by Tim Ord of the Ord Oracle. You can check out his website at ord-oracle.com. Check out his newsletter and book. Before we into the break, we're looking at the Gold Miners ETF Daily. We've got 3 drives to top pattern forming.
Right. Yeah. So we're up to new highs here. We're starting to probably build some sort of a top in this vicinity. I actually had an upside target around the 50 range. We're pretty much in that range. I sold last Friday, I think it was. And it could spend a little bit of time up here, but ultimately we're going to go back down. 3 drives to top pattern, have a downside target to where the pattern began, which happens to be 39. And if you look at if you look at the previous chart, you got basically 40 area as support. So it's nice to see where the dailies and the monthlies and the weeklies all kind of line up together. But get back to the daily one, which is the 3 drives of top pattern. We should find support at around 39, and it should be kind of a scary, decline and whatever. And scary is good, because if you don't have scary, you don't have a bottom.
Right.
And it's going to go down until you do get scary. So, but that scariness should happen right around this 39 level. And I think that's going to be an excellent buy, because the bigger trends are up. The monthly charts are on a buy signal. The weekly charts are on a buy signal. So this is just kind of a shakeout to the upside, get some of the longs to sell, and another uptrend is going to ensue, I guess you might say. But we could spend some time on this pullback. This pattern started basically back in February, and it's topping right now in April. So you might have probably not a May, maybe a June bottom, at worst a July bottom. A lot of times there's a cycles come in around the July period. But, we could spend a few more days up here building this top before it starts to pull back. But around that 39 area, in my opinion, I'll have some other indicators to help prove that point, that 39 range will be a buy signal. So it's not going to be off of feelings that 39 should hold. I'll have some indicators specifying that is the condition. So we'll have to wait and see if those indicators actually do develop around that 39 area. But that's my target. Then from there, back up. I think actually the market's actually going to keep getting stronger. I don't have those charts right in front of me, but I got some longer term charts on the XAU gold ratio suggesting that this uptrend could go for a while, for another year, maybe 2 or 3 years. And there's cycle work that comes out 2027 for a cycle high. So that's over 2 years. That's 2 years away yet. So things are going to actually be quite fun.
Yeah.
And actually, I think I do have some ratios. I don't have them on this that I have on today, but I do have a ratio between the NDX, or actually it's the QQQ to XAU, I think it is.
Sure.
And it's actually, it's the other way around. It's actually XAU to QQQ, and that ratio is starting to turn up, and it's been going down for a while. So I think actually the gold market equities is actually going to outperform the equity market. I think going forward. So it'll be kind of fun. So.
Well, if you can remember that ratio for Tuesday, I'm sure we would all definitely take a look at that for sure.
Right. I'll make sure I put it on, and we'll take a look at it. But the short-term picture is a little bit messy. Pullback, not the time to really focus on buying stocks right here.
Yeah.
But 39 in that range, we should start seeing some pretty good setups. So, so if you got some stocks in your portfolio that are gold related, and they kind of gone parabolic, which some of these, it's probably a good time to kind of let loose and try to buy them back a little bit cheaper. So, but the bigger trend's up. If you actually hold them, you'll be fine. But they'll scare you a little bit probably over the next several weeks, if not next couple of months.
Definitely. So. And on that point with the parabolic movement, you got gold stocks. Some of our Tigers here play JNUG, which is from our friends over Direction there. I mean, this is it is just insane. This is the 2 times leverage bull ETF.
Okay.
Tim, and just seeing that movement is absurd, And a lot of people were kind of taking profits at this level. It's been phenomenal for gold. I mean, it just really has with all this uncertainty,
Yeah, and certainly appears it's going to go on for a while, just because the tariffs are kind of Trump's a little bit unpredictable. I like him as what he's doing, but he's a little bit unpredictable, and markets markets like certainty, I guess you might say. So this could be a little bit choppy. Like I said before, we're probably basing in the equity market over the next probably several months, but I think this is a basing period, not more decline coming, because you don't get signs of strength off of a bottom unless it is a bottom.
Right.
And so I think we're starting a basing period. So I think decline's over, but it's still going to be a messy market probably most of the summer, probably on both these markets, kind of back and forth.
Definitely.
So a little bit of patience, but I think fall is going to be kind of gangbusters for both markets. But I think overall, the gold market, like I said before, is probably going to outperform the equity market. So we'll see how that turns out.
Definitely. And maybe Tuesday as well. One of the things, we have a few silver guys in the den. And I remember you brought up, I think it was an XAU to SLV ratio chart.
Right. I got a silver gold ratio, right?
Yeah, that might be somewhat interesting to talk about, because silver just hasn't. And I think fundamentally gold operates a little bit differently than silver. But the fact that, and a lot of this might be central bank posturing and people fleeing to gold as a form of kind of just safe haven as whatever basis trades unwind. But it's interesting to not really see silver pick a massive anything to the upside when gold has just gone, as we said, just completely parabolic.
Yeah. Well, it used to be a gold or silver gold ratio. When that ratio's, they always said silver outperforms gold in bull markets for gold.
I see.
And so far that's not happening. But, this is, things change over time. So that may not happen this time around. But yeah, silver's kind of lagging compared to gold. And I'm surprised that, because silver is more of a industrial type metal. It's a lot of, gold is too, but not as much as silver. So I'm kind of surprised to see that. But, market does what it does. You don't dictate to the market what it's supposed to do. Right. Yes, it's the other way around. The market dictates what you're supposed to do.
Absolutely.
So you follow the indicators that work. So, and let the market kind of lead you where you're supposed to go. So we'll see how that develops. But yeah, I've been noticing that too. So. And actually, the XAU gold ratio really hadn't come off the lows yet, but I think it will. And I think that'll come towards the end of things, maybe later this year, if not next year. Some of these gold stocks are going to start rocking, because there's a lot of bases on these. A lot of stocks I'm looking at, the monthly charts are just turning up, and they're turning up the volume. So I think those performances are still in front of us. And probably in a big way, since it's the volume's coming in on the monthly time frames. So it'll be interesting to watch how that develops.
Yeah, absolutely. So, we were even looking at Harmony Gold recently. That thing has gone parabolic too. Tim, thank you so much. Hope you have a fantastic Easter. We'll see you next Tuesday.
All right, sounds good. Thanks.
Take care, Tim. Folks, you stay right there. We'll be right back for a short segment after the break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. We got a short little segment going on here. We're joined by Tim Ward. Good interview for sure. We'll have him back on Tuesday. Yeah, the SPY trading up 0.2% right now, coming off a little bit from the beginning of the show. The composite off about 0.11%. That flipped red as well. And the Dow Jones Industrial trading off nearly 500 points, off about 475 points right now. Russell futures trading up only 0.89%. That has fared a lot better throughout this show. The gold contract also coming off about 0.36%. I want to look at Rocket Labs a little bit. So what this deal is, so they got a $1.3 billion grant. Where the heck is my thing? Oh, right here. Yeah. We're going to pull this up here. It's from Barron's here. But for the UK Ministry of Defense, selected Rocket Labs for the hypersonic technologies. It's a $1.3 billion program. The US, so Rocket Lab has HASTE, right? And that's basically just a hypersonic, just booster. Participated in a $46 billion contract. Now, this seems insane, right? But it's going to be between a lot of different companies, essentially, right? So, I mean, whereas what you see with the UK is, of course, just for the hypersonic technology, the Golden Dome is going to be just an unbelievable lattice of so many different technologies and capabilities. So even if Rocket Lab gets picked, it's not necessarily clear how much they would get. Of course, you have L3 Harris coming in strong with theirs. Of course, Anduril is as well. Booz Allen. I'm sure ASTS to a certain extent. I'm sure SpaceX to a certain extent, although it would be much more partnership-wise. So this is one that definitely you want to watch. Now, this is a long-term play with Rocket Labs, and it's a little bit memey, okay? They're probably not going to be profitable for the next few years, but they have proven themselves to be extremely competent in developing rockets that work. This is very fascinating. Folks, thank you so much for joining me. Have a great Easter. We'll see you Monday.
Building wealth